welcome to the week ahead from ICM.com. So first we're going to talk about the key movers that are still affecting the market, and then talk about the key economic events or releases to come, and then do some technical analysis on key pairs on the MetaTrader 4 platform. So first, it continues the continuous spread of COVID-19 is still weighing on the economic recovery. Many investors are just afraid that the current lockdowns are affecting the market, are going to affect the economy. We started seeing some impact today in the the manufacturing PMIs and services PMIs coming out from the Eurozone and mainly the United Kingdom. But the manufacturing PMI came out better than expected, but the services PMI dropped and showed also a significant drop from the previous levels. This sharp drop is just raising the chances of maybe another a double dip recession. So this is just going to be the headline on the headlines for the coming weeks to come. Since as long as we're going to see a drop in economic indicators and retreat in economic indicators, this will just raise the chances of having a very bad performance. This means that we're having very bad performance in the fourth quarter, and this could raise the chances of a double dip recession. So the cases continue to soar. That's in the United States, for example, they crossed $250,000. So this is just pushing policymakers to do whatever it takes to just stop the spread. There are some positive headlines on the vaccines. We've seen headlines from Pfizer, from Moderna, and today from AstraZeneca. So the vaccine is apparently there, but there are a couple of questions regarding the vaccine, especially that it's just differing on the doses, on the price, on the way to store the vaccine, whether it should be in a temperature of -70 in a usual temperature. For example, Moderna and Pfizer, we had there's an issue for storing, but when it comes for today's AstraZeneca's vaccine, they stated that it could be just placed in normal refrigerators. So this is just also an advantage for AstraZeneca's vaccine over other vaccines, but still also the doses that should be taken from AstraZeneca is higher than the other ones in order to have the same efficacy. So the same dose is just giving a 70% efficacy, while others they're showing 90%. So what would be coming forward for the vaccines is just assessing a couple of things. First, when the vaccine will be available to mass production. Second, how this vaccine should be stored. Three, what could be the side effects of this vaccine. Four, the durability of this vaccine. Five, the price of this vaccine. So all these 5 things we have to just assess when talking about vaccine and its impact on and how it could impact the vision of a stoppage for the spread of COVID-19, and this could take back life to normal. So this is what's related for COVID, the spread, the impact, and the vaccines. For mixed economic data, last week also we started seeing like some of the data were good. For example, the inflation figures from the United Kingdom, but the inflation figures from Eurozone they were bad. So this is just we're getting in mixed data, and this definitely depends on the maybe on the lockdowns that there are taking place. So today, for example, from the United Kingdom, we've seen, despite the lockdown, the manufacturing services PMI came better than expected, while the services PMI from the Eurozone was worse than expected. But in general, they are both being affected with the recent lockdown. So it's just about how bad the lockdown will impact, or the restriction of movement will impact the economic activity. So these were the key movers, and definitely they will continue to be the key movers for the weeks to come. So now let's highlight the top economic releases. Starting with Tuesday, we have the reading of the German GDP. The first reading came out at 8.2, and no expectations of a change from the preliminary reading. So expectations of an expansion by 8.2% for the German economy in the third quarter. The German IFO Business Climate Index expected to drop to 90.7 from 92.7. ECB President Christine Lagarde will be also having a speech on Tuesday. The US consumer confidence is expected to drop to 98 from 100, while also we have for oil traders, we have the weekly crude oil stock by the American Petroleum Institute on later on Tuesday. On Wednesday, it's a bit long. Like we have many economic indicators since the US is off on Thursday and Friday. So this is just moving the economic indicators that are that should have been released on Thursday and Friday to Wednesday. So first we start early from New Zealand with the governor of the Reserve Bank of New Zealand speaking. Mainly we're seeing some strength of the New Zealand dollar. So this is just due to how New Zealand dealt with the virus and its impact on the economy. So it had its impact on the economy was much less than rival economies, and also that the Reserve Bank of New Zealand was so fast in acting against the downsides. So this just supported the flow towards the New Zealand dollar, which was rallying across the board. So maybe you could highlight the recent rise in the New Zealand dollar, maybe its negative impact on the economic recovery. So moving to the Eurozone, we have the ECB Financial Stability Review. And for the United States, we start with durable goods orders, which are expected to show an expansion of 1%. The second reading of the third quarter GDP from the United States expected to come at 33.1. Initial jobless claims for the week to rise by 733,000. They rose by 742 last week, hinting to some impact of the recent spread on jobless claims. Core PCE price index. PCE price index is one of the key gauges for the Fed in monitoring inflation, so expected to show no change, almost 0% change. New home sales expected to rise to 975,000 from 959,000. Weekly crude oil inventories by US Energy Information Administration. And we have also the minutes of the last monetary policy meeting by the Federal Reserve. On Thursday, it's a bit shy, especially with only data from the Eurozone. GFK consumer climate, German consumer climate expected to drop to -5 from -3.1. Also, just to show the impact of the recent lockdowns on German consumer. Also, the ECB will be publishing the minutes of the last monetary policy meeting. On Friday, also, it's shy with German MUBA President Weidmann speaking, and the consumer confidence from the Eurozone, which is at -17.6 at the moment. So this is for the economic releases to come. Now we're going to go to the MetaTrader 4 platform to do some technical analysis on key currency pairs. So first, let's start with the weekly chart. You can see how the market last had a bit of a correction, and now we're just having another movement higher. So on the smaller time frames, you can see we were stuck here inside a certain range. So I'm just going to go closer for this. So on the hourly chart, if we just get closer, we were trading sideways between this range, 1.18 almost, and 1.1895. So this range we were trading sideways, and now we were able to push higher towards 1906, coming closer to the previous resistance area, which comes near almost 1920. So what we've been witnessing was a channel move to the upside. So this is just a sideways, clear sideways move with just some persistence to the upside. While on the smaller, so we had a couple of channels last week. I'm just going to demonstrate to show you how the market acted clearly technical last week, and we had very good signals. So those who were following the live midday sessions were benefiting from these formations. So we have this first channel form, and then we had another steep channel formed with the correction. And when the price broke above away from the channel, we continued to the upside, which we could be now moving forward to having another channel this way. Since if you just combine the previous bottoms, you can see a trend line. And while drawing the opposite to the trend, the opposite line or the parallel line to the trend line, you can see also how two times we just had the same rejection from the trend line, which could signal that the coming the coming top could be closer, it could be the same as the top of the channel and the previous top. So this could highlight some resistance near 1920 and then near almost 1980 120 area. So this area here could be posed with certain selling pressure, while any drop back below the uptrend line could lead to further declines towards 1840 on the first picture and then towards 1813 and then another big decline towards 1743. So these are the key levels for an alternative scenario or bearish scenario. I'm just going to add some indicators to see how. So on the weekly chart, it's clear that we're still trading inside the upper range of the Bollinger Band, trading sideways. It's very clear how we're trading between 116 and 120 range. Also on the daily chart, the sideways is just clear. We're finding support at the 100-day exponential moving average, and the market is poised to move maybe towards the upper side of the upper line of the band near almost 1960. We just go closer to the hourly time frame. We were finding support during the past couple of trading days. We were finding support near the 100-hour exponential moving average until we had this break here from almost 118.90. Moving to the British pound against the United States dollar. So on the weekly chart, you can see series of following this bullish engulfing. We had series of positive weeks or bullish weeks. However, this is just traders should be very careful with any headlines regarding Brexit. We're just being a bit bullish. So the market here, you can see how the market is trading higher than this channel. First, we had this channel, and then we had these breaks. So we definitely could point for some resistance here, which was earlier today, and then the market retraced lower from 33.80 and then continued higher. So what we could be pointing out for the next resistance level is just here somewhere between near 134, 134.15, and the next at 34.80. These could be the key resistance areas, while any reversal back below 33.10 could lead to a bigger correction towards 131.84. So these are the key levels for the British pound against the United States dollar. I'm gonna add indicators. You can see on the daily chart we're just trading near the upper line of the Bollinger Band, the upper band exactly, and the RSI is just approaching the 70 area. And on the H4, it's very clear the upside move that is taking place. However, it's becoming steep, so watch out for any break below the parabolic movement that you can just draw here. So watch out for any break below it. The dollar against the Japanese yen. So following the Moderna's headline, we saw a drop again in dollar against yen. I'm going to start with the weekly chart. On the bigger picture, we're still trading sideways down. It's very clear, just a very clear move. On the daily chart, you can see this big range formed by Moderna's headline, and we were trading inside this range for a while. On the H4 chart, it's much clearer how the volatility just dropped on the pair, and we are barely witnessing any movement during the past couple of trading days. So following this movement here, we're barely watching some movement. So make it 103.60 a key support zone, and the coming zone is near the previous bottom around 103.25. And if we just want to dig deeper for some support zones, we can just go for 102.70, which is also a previous reversal point ahead of the wick. So if we just want to eliminate the wicks or the tails, you can just go for 102.70. While on the upside, we're still trading down this trend line, which is just holding. So in order to have a change in all this movement that has been happening since June, we need to clear above the trend line. Going to bigger time frame, to smaller time frames, you can see here on the hourly chart, we had this sharp move on the headlines, we had this formation, topping formation, and then the market moved lower, and now we're stalling near this level. So we highlighted the key levels on the downside. Well, on the upside, we need to definitely move back above 104.35 in order to gain some optimism, and then another push higher towards the trend line, which sits near 105.40 almost. So this is for the dollar against the Japanese yen. What does the moving averages and Bollinger Bands has to say? So if we go for the daily chart, you can see we're just trading normally between ends. We had a reversal from the lower line of the Bollinger Band towards the upper one, finding resistance near the 100-day exponential moving average, and then continuing lower again. On the hourly chart, you can see how the Bollinger Band is just signaling for low momentum, and the width of the Bollinger Band is just very little. So we're just waiting for any mover or any headline that could spike or spark another movement in the dollar against the Japanese yen. The dollar against the Swiss franc, similar formation. So if you just remove these indicators, you can see that on the daily chart we have these movements on Pfizer, and then we're still stuck in the same range. On the H4, similar. You can see how similar following. We're still stuck in the range that we're trading in following the announcement. So this was the rally, the announcement rally, and then we had a little bit of a sideways up movement, and now we're just trading almost sideways down inside this key range that we've been trading at. So for highlighting key levels, definitely we can just highlight the previous bottom near 90.34 and 89, 89.85, 89.70 as support zones, while resistance could be near the previous top of almost 91.95. But definitely we should be breaking back above the trend line, combining the previous bottoms. Watch out for any formation. If the dollar continues to weaken, watch out for a formation of a channel that could be coming in play if the market moves down again. So which could coincide with the previous support zone of almost 90.34. So now we're gonna add the indicators again for the dollar against the Swiss franc. Go to the daily chart, also the 100-day exponential moving average continued to show clear resistance, so watch out for any break back above it. We're a bit far away, but it's just coinciding with the technical levels, while the bottom or the lower line of the Bollinger Band is almost near 1950. We go to the hourly chart, we had sideways movement the past couple of hours until breaking away from this support zone with a bit of strong momentum, and now the market is holding near 90.80 and RSI is at 30 level. The Australian dollar against the United States dollar, we're just still trading inside the key range between 73.40, 72.60, 72.20. So this is the range that we've been trading in for a while. But today we're having, for the past two, like today and Friday, we're having a clear upside moves off higher lows and higher highs. So it's very clear for the momentum of the market. But it's just still capped with the previous resistance zone of 73.40. But if you just want to go closer to bigger time frames, you can see on the H4 that the coming resistance could come near the previous top of almost 74.10, as long as we're above we cross above 73.30. While any reversal back below, at least if we just have a closer look to this trend line here, a failure here or a break below this trend line could lead to a sideways move, sideways down move, and then another move inside this consolidation zone that we've been trading in for a while. So this is for the Australian dollar against the United States dollar. So on the daily chart, we're trading in the upper side of the Bollinger Band, a bit far away from the higher line, which currently coincides with the previous top. If you go to the hourly chart, we were just finding support below the 200-hour exponential moving average for 2 times, and the market rallied higher. The New Zealand dollar is among the strongest across the board. So we talked about the New Zealand dollar a while when we were talking about the fundamentals. So if we just go to the weekly chart, you can see the series of bullish weeks. We're currently trading near the previous resistance zone. So we had the key resistance zone here, which we're currently trading at. So a continuation here would definitely pose some resistance near 70 psychological level, and this could lead to a sideways move near this area. So we had a strong move, sideways up move, another impulsive move, and then wait for the coming consolidation zone, consolidation move that could be taking place in the coming months. Moving to the daily chart, it's very clear the upside move that's taking place since starting from almost 65.50 and then continuing to almost 69.70 today. So the key levels, we highlighted the key levels. So the coming key level for the upside could be near 70.60 after crossing the 70 psychological level, while dropping back below at least the previous top, which was almost 67.96. We're a bit far away from it, but definitely we need to move back lower below 0.68 at least to have bears back in control and maybe raise the probability of a bigger correction lower. But as long as we're above these levels, above 69, above 68.80, this could just mean that we're continuing in the same direction. On the daily chart, we're just also approaching in the upper line of the Bollinger Band. The upper band sits at 70.27. The RSI is just crossing above 70 again. Moving to the H1 chart, the hourly chart, you can see a progressive move higher, a smooth movement for higher highs and higher lows, with the RSI still in its range between 60 and 70. Gold is just weakening today. If we just go for the weekly chart, you can see the sharp move lower, a little bit of a move down last week, but still holding at the same support zone. So moving to the daily chart here, it's going to have it a bit closer. So we're still trading inside the lower bound of the range formed following Pfizer's headline. So this was on Pfizer's headline, and now we're trading sideways for a while inside this key range here between 1900 and 1850. It's a $50 range. If we just go to the hourly chart, we were also talking about the channels. We were having a channel here that we were trading at 1, 2, 3, 4, and then the market had a break, and now we were rejected directly from this line, which is just forming another downward channel that we're currently trading at. So you can see how this area here was a clear area, and we need definitely to move back above it in order to have some optimism on gold. So we need to move above this trend line, and the coming resistance could come at 1885 and then 1900. While a continuation for the move down will definitely need to raise the chances of a retest of 1855 area. So this is all for gold. Also here, if you just add the moving averages, you can see that we were finding resistance near the moving averages 100 and 200, our exponential moving average. And now today, the Bollinger Band is just widening again, following a sideways move that brought the bands closer to each other. Silver, almost same formation. So you can see here, it's the daily chart. We have the dip on Pfizer, and then we're moving sideways. But on the bigger picture, we're just finding support near this area, which is almost between this area here, between 2350 and 2370, just along this trend line. So by drawing them here, so this is the formation that we are currently trading at for silver, while on the bigger picture, we're just also trading inside a channel. So if we just do this here, you can see that we're still inside this channel where its lower bound is just coinciding with the lower band of the Bollinger Band, and it's between the 100 and 200 day exponential moving average. So watch out for any drop lower here in the break of this, since it's just, I'd like to remind you of this channel that we were trading at sometime earlier, and we got the rejection exactly from the side of the channel. So watch out for this formation, watch out for any break here, because it could lead to bigger decline on silver. So moving to Dow Jones, on the daily chart, you can see how the market was clear. We have the movement here on Pfizer, then the market corrected lower, and then on Moderna also we had another move higher. Now we're having another phase of a correction. So on the bigger picture, we're trading inside key range between 28,800 and 30,100. This is for Dow, not the futures. So that's the move on the bigger picture. If we just get closer to what's happening on smaller trades, you can see that this resistance level it's holding, it's almost near 29,530. So you can just draw here a 50 pips range, a 50 points range, which could be where selling positions could be for, or selling orders could be for. So watch out for any break above this. It could give some more bullishness and then a retest towards the 30,000 level. While a failure here and the continuation of this trend, so you can see in this movement we're just posting lower lows while the highs are just contracted at the same place, almost near 29,500. So watch out for any big drop which could just break 29,200 and then lead to another drop towards 28,900. So these are the key levels on a bearish scenario for Dow Jones, while a break above this resistance area here could lead just to another retest towards. First, you can just draw this trend line here where we could be finding some resistance and then the market could move higher again on a bullish scenario. This is for the Dow Jones. The WTI is just moving higher again. We got some resistance near previous stops of 43.20 almost. It's the previous stop. So this bullish rally is continuing. This trend line here is just a key trend line. So watch out for any break below this key trend line because it could lead to further declines. While this area here 43.20, 43.40 is just skipping any movement to the upside. While this area here, like between 40 on the bigger picture, between 43.80, 43.40, it's just a resistance area. Any success on breaking above it could lead to just a push higher, maybe towards $48, $49 per barrel, where we could be trading again inside the range, similar to this formation that we had here. Since recently, we've been hearing from top oil ministers that they prefer a stabilizing market in order to build their assessment on. So this is a kind of market that they are looking for. So maybe this is what we would be witnessing again here. So watch out for how this could come and play. We could be trading for a couple of months inside this range between $43 and $48 per barrel. While in a bearish scenario, on a failure of breaking to further high and a disappointment and the drop here, first support line could come in at 42.80, which is the trend line. And on break of the trend line, we can just start looking for 41.30 and even lower $40 per barrel as targets. This is all for today's session. If you just have any questions, please write them down. I'd just like to remind you that all the information, news, analysis, and opinions mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. Perfect. This is all for today. Thank you all for joining and wish you a safe trading week.